Morning, Stocktwits Nation. I'm here not with Shai Balor. Shai is actually at a rocket launch right now, which is very cool. But we have Rob Petrozzo here, who is co-founder and chief product officer of Rally, and you're going to help me co-host today. Are you ready?
I'm ready, Katie. I'm not watching rockets. I'm watching all my money go to zero. So
Yes,
I'm here with you today while that happens.
That is the headline. You know, we're gonna keep it chill. Rob's got an interesting background. I know we like to get into technicals a lot with Shai. We're gonna cover the news, but also get a little more conceptual. But of course, all eyes are on Liberation Day on the 2nd. I don't know why the hell they're calling it that. Would you call it something else, Rob, or do you like that branding?
I'm kind of into it. It's a throwback to a time when everything was simpler. Liberation Day.
Yes, it feels very like Les Mis, like
yeah, it's very romantic.
People chanting in the street, and like it's Liberation Week, and we are squarely in the red. I think the headline is there's a lot of a lack of clarity and specificity around what the hell is going to go down on, I guess, Wednesday. We have some economic data dropping. There's a lot going on. So we're going to cover the headlines, but also we're also going to talk about some trends in retail investing that is really interesting. And Rob's going to talk about the latest offering on his platform, Rally. It's a great time to talk about collectibles because everything else is just not looking good.
You got to go hard assets, I guess. So they tell me when things are going bad everywhere else. So I mean, if you don't own gold, you might as well own dinosaurs and random casks of whiskey. I don't know, not financial advice, but that's my opinion at least.
Oh yeah, I feel like we should. Okay, let's get ahead of this. Nothing we say. We're both Italians. We're gonna be yapping. It's like that meme where it's like an Italian gives you life advice and they just throw up their hands in case it ruins your life. Like, I assume that's gonna be the vibe today. But before we kick off, Rob, why don't you tell our audience who you are and tell them what Rally is if they're not aware.
Yeah, so I'm Rob Petrozzo. I'm the founder and the chief product officer, co-founder and chief product officer at Rally. So Rally's kind of like a stock market for collectibles, but it's everything from, we did NFTs when that went crazy. We still have a bunch on the platform, but we really focus a lot on tangible assets. So it's things like classic cars and watches and rare wine and dinosaur fossils and all these kind of trappings of wealth that for the ultra wealthy have made lots of money for them over the course of decades and in some cases, hundreds of years at a time. But for the most part have only been available for accredited investors. So we take these insane assets, super rare assets, super valuable assets. We fractionalize them, break them into shares. We run our version of IPOs through SEC qualified listings, and then they trade on our platform through our secondary market. Then over the course of sort of the lifespan of any of those assets, they'll go to auction or we'll get private sales done. We've made a bunch of world records. We sold the most expensive video game ever for $2 million that investors bought in at $150,000, a Super Mario Brothers game, and they all get paid out. So it's really become like this small world to trade and to kind of own real equity in really important assets and collectibles. Everything from, again, hundreds of years ago up to recent and future collectibles.
Awesome.
If that's a very not concise way to explain it, but I'm
good.
trying my best while I lose all my money.
It's okay. What's your favorite piece you've ever had on the platform ever, whether it's still there or it's been sold?
Yeah, I think nostalgia is always really important. I think now, especially when you see every Instagram account, every kind of TikTok is like a mood board from the 90s. And that's kind of where I started coming of age, I would say, without giving away too much about how old I actually am. So there were these really specific cool cars that I had as little micro machines or little models when I was younger. One of those was this Jaguar. It's a 1993 Jaguar XJ220 to get very technical. But it was this crazy looking supercar that kept popping up in my childhood. And there's 4 or 5 of them in the United States. So we got one of those in 2000 or 2020 or 2021. And that was a weird, almost cry thinking about my childhood moment and pushing the trauma down. And it was a good sort of bring it back to reality type of moment. That's still on the platform, I believe. That was a really quick find because I didn't tell you about this beforehand, Katie.
I like that color green.
Yeah, ours is silver. That green is kind of cool. That's also that was the 1990s teal kind of green. Everything looked like that, and that's a microcosm of the entire decade, I think, which is perfect.
I agree. Well, speaking of Jags, did you see the new one?
No, because they're Fords now. I don't take it seriously anymore.
No, look, we have guys. Can we pull this up? The new one. It's actually because remember they were doing that big rebranding.
Yeah. Well, That was like, from as a designer, I'll tell you too. Like that was one of those moments where I think Twitter and everybody got hold of it quickly and had a lot to say about like what the rebrand was and how bad the look and the feel was.
Yeah.
This is not like this. Everything now feels like you're just trying to capture a moment on the internet for like rage bait, and that's what I
Yeah.
really thought this was for a good week and a half before I saw the real unveiling of it.
Yeah, I mean, yeah, it's interesting, I guess. It is like, I mean, you're in the design world. Like, is the aesthetic now definitely squarely back to the '90s? Like, what is the era that people are referencing back to in design right now?
I think it's lost right now. I think that's also an indicator of what used to be like the giant budgets for some of these companies, especially publicly traded companies. When it was time for like a rebrand, that's when you see like Coca-Cola or Pepsi or one of those brands just change like the
Yeah, there
angle
it
of a
is.
letter would be like a little bit different. I didn't realize it was even on the street. That's insane.
Yeah,
But yeah, now it's like everything's got to go hyper everything, I think. And that just goes for all design. I think making somebody feel something now is what actually matters. And so few people do that. So like
yeah.
95% of design is kind of over the top, and the flat everything that dominated the last like 2 decades is kind of dead. I think it's also
So,
like you see like when a Lululemon CEO comes out and says like consumer habits are changing and whatever. That's saying like we're not doing a good job of making people feel something in the design of our spaces or our clothing or the pop-ups or the events that we do. And then you have like, the Skims of the world and Aloe and whoever else coming out just murdering on all those like activations that they do and really caring about the way things look and feel and the mood. And you have to do that. So that Jaguar is ugly to me, and it's not referencing anything other than what people thought the future should look like, but it's making people pay attention immediately. And that's like all that, unfortunately, that's all that matters in design right now.
yeah, well, I was gonna say smash or pass the Jaguar, but it's a pass for you.
Right now, but I'm susceptible to the crowd like everybody else. In a year, when everyone loves it, all of a sudden, I'll pretend I love it too. I'm not
All
gonna lie.
right, all right. Thoughts on the
Yeah.
Cybertruck?
Damn man, that is horrible. That is so bad. It's so, and I'm not just saying that. It has nothing to do with political preference. It's horrible. It's just so
Yeah.
ugly. It's what the Twitter logo is the same way to me, where it's what
Yeah.
a kid in the '90s thought the future was going to look like and thinks is cool, and that's what
Yeah.
the problem is. I think with most of
Well,
what's
that's
coming
who's
out
in
of.
charge right now, I think. A bunch
Yeah,
of loser kids from the '90s catapulted into power, and that's now look at what we have.
I just unlocked the real Katie. My bad. I meant what I'm trying to say is that design is subjective, and from my subjective opinion, it's all horrible right now.
All right, everything's terrible, including the design's terrible, the indices are terrible. We want to get into something though. It's really interesting. So the World Economic Forum put out this crazy long report. It's 60 pages long. They did it with Robinhood, BCG, 13,000 investors, U.S. adults, all the demographics represented, 13 markets globally. And it's really interesting because they did a similar study in 2022. And so this one was looking at 2024. And some of the findings were really wild. And one of them was about how investors are thinking more short term, especially younger investors. So the percentage of people who said they were investing for retirement goals actually went down. And the percentage of people who said they were investing to have money to do stuff in the short and midterm, like huge increase, 27 to 45. That is like, to me, that's really wild. And I think indicative of kind of where we're at in the economy. And Rob, I know you've written about this sort of, I think you said it was like investing soulless now. What do you mean by that?
I mean, in the words of Howard Lindzen, like he coined that degen economy forever ago, and he's been talking to me about it for half a decade. Everybody's a degenerate gambler. This whole new generation prefer highest variance outcome, and they're also down to do like that kind of lost porn style. Look at look at my screenshot. I lost every single dollar. I'm gonna run away from home and not tell my parents type of thing when they're 18 years old, 19 years old. I don't know what happened, but it makes me think that gambling in some capacity is going to get banned between now and like 2030.
Whoa,
Okay,
what?
it's just I'm telling you, as a degenerate gambler, as somebody who grew up in Brooklyn, as like in a Brooklyn Italian neighborhood where gambling is the soul of what you do and everything is a bet, and you're like literally gambling on football as soon as you possibly can at age 13 or 14 with local bookies. And I still look at sports that way, where it's a gamble and it's more fun to do it while I'm watching the game to gamble on it. But they look at every single day like that now too. They would rather everything be a gamble, And in their mind, because they've seen the screenshot of someone turning a $20 parlay into $800,000 once, they believe that that's the outcome that's most likely to happen for them. When in reality, they haven't seen that crazy rug pull, which maybe it's starting to happen a little bit now, and it happened a little bit with meme coins. But you need a 2008, 2009 to like have some directional accuracy on what life looks like when you're 40 or 50 years old. They don't have that yet.
Yeah, it's definitely interesting. We're going to pause on that for a second and take a quick look at what's going on in the market. Dow futures are dropping 300 points. So again, we are waiting for this big tariff news break, and no one really knows what to do about it. I will say this morning on CNBC, Tom Lee was on, and he feels pretty good about a V-shaped recovery. He thinks this is all around just like unknown. Markets don't like uncertainty. He feels like it's going to swing around. On the other side of that, you had Goldman come out with their revised outlook, and they're putting a 35% chance, speaking of gambling, on the potential of a recession. So this is up this year. So this is up from before they said it was going to be 20% chance. Now they're saying 35. So a lot of things are unfolding right now in the market, and I think you're probably seeing this. A lot of your favorite stocks are probably part of this pull down. But yeah, we'll wait and see how things go here as we near the opening bell. Hopping back over to your point, Rob, I think one interesting thing, I think you're right about the Degen economy. We talk about that a lot. And I'm curious what people in the chat think. But it also seems to be this, like, to your point, nostalgia is really important to people. And then when you look at actually what products younger investors are investing in, they're actually over-indexing in alternatives. So like according to this study, Gen Z were more likely to say they invest in alternative assets, and that's alternatives, not crypto. So they were at 27% versus millennials, which is a lower amount. So that's interesting to me too, because then at the same time, they're like grasping for something real. Do you see that in your community with younger investors?
Yeah, I think they like gravitate towards 90s and 2000s in particular. I think there's a weird romantic thing about that era, which, having lived through it, it wasn't really that romantic. It was a weird time where analog turned to digital. But I think that, this is, again, not I'm sounding like a crazy old man yelling, "Get off my lawn," and walking around with a skateboard. That's not what this is. But they have this vision in their head of what like the year 2000 looked like that is entirely inaccurate. It wasn't, Katie, you know this, they don't know about dial-up internet, and they don't know about what it was like to use MapQuest, and they want to pretend they do. But I think part of what the problem is that they're trying to find something that's not the right now, because everybody's in the right now. But inevitably, they wind up doing all the same things from like these weird cliff notes of the 2000s. So what we see on Rally is that when it's like Pokemon related, or it's like trying to think of some other assets that would match it. Dinosaurs a little bit, but not as much. That's like when you're in 5th grade, 6th grade, learn about dinosaurs. They're trying to go back to this era from their version of like 15 or 20 years ago that they don't know enough about, I think. So it's kind of like, jumping to say something is classic or the best or a perfect thing right away is what they do. And that's when you see a lot of run-ups, and it happens with meme coins too. They pile into one thing at the exact same time, and they'll run it up. And that happens in our secondary market sometimes too. Then the reversion back to the mean is like when they're just done with it, because the attention span is so much shorter too.
Yeah, it is just like a fascinating change of mindset into this like YOLO midterm. I like to gamble on everything, but also I want a piece of that cool car. It's totally different, and I think part of that is the age at which Gen Z investors first started learning about investing. So I don't know about you, Rob, but I didn't really get it until I was like in my 401k. Like my dad showed me how to use a Vanguard account when I was like 18, 19, but like I didn't know what was going on. These kids, 17% in adolescence. So before they go to college, 17%. Like look at that. Look at the drop off in the other generations. So I do think it's cultural now, right? Investing is
no
cultural.
question. You're also you're smarter than the average bear too, Katie. We've talked about this before. You're like basically Ivy League. You understand exactly what's going on in every single marketplace.
I'm not Ivy League, by the way.
Notre Dame was pretty close to Ivy League, but you also you had like the creative curiosity around the markets, I'm sure, early, and you understood money early. And I think that part of what is missing right now is that when I came into the market and I'm like 18, 19 years old, this was like 2008, 2009 when I really started investing. I lost everything right away after like saving a bunch of money. Part of it is that there were only like two real ways to invest. It was through like a 401k with work or like going long the stock market. The idea of derivatives and options, I started playing around with options when I really lost everything. You had to go through a crazy process to get approved for options on like an E-Trade account back then. It was insane. And so, you're learning it as you go a little bit, but you only have one or two lanes to get into. Now, if I'm 18 years old, I'm in college, and I have like $100 to my name, you have a million different ways to invest or bet. And it happens really, really quickly, but there's just never been that 2008, 2009 window. And then that's countered by the fact that TikTok and Instagram Reels are built to like evoke really quick 30-second emotion. And people see anything with sad piano music over it, and it feels like tugging at the heartstrings, romanticism. Sometimes it's not. Sometimes it's just something that's just a passing trend or something you shouldn't even worry about. But they'll take that, turn it into like an investment thesis, and then them and 40 friends will do it and lose all their money right away. There's no consistency. There's no permanence. Everything is sort of like very fleeting, and you got to follow. They're following momentum so quickly with all these different options to lose their money. So they'll lose their money a bunch of different ways.
All right. Yeah. I mean, why not? Like we're all doing that this week. We're all on the spot.
I'm sorry about this. I'm doing the angry old man thing because I'm losing a Toyota Camry pre-market right now. It's on me. I apologize.
Get off his lawn. Let's turn back to like the here and now of the markets before I want to ask you a lot about Gen AI because everyone's using the Studio Studio Ghibli.
I like that French twang you put on it. That's pretty good. Yeah.
But we have an IPO coming this week. So last week we had CoreWeave, which I don't know if you guys watched last week. Shai had a meltdown about it. He does not like CoreWeave. And it's funny because after he said it, I kept reading more and more opinions that were similar to his, talking why he didn't like the IPO. It wasn't as hot as they thought it was going to be. This week we've got Newsmax IPO. Believe it or not, Rob.
I did not even know this was happening this week. I didn't know the IPO window was even open.
Yeah, I was gonna say. I know you know about this one.
But what is that supposed to mean?
I know. What? So I read the S1 last night. Fascinating stuff. But what was really interesting is their advertising revenue. Of course, if you don't know Newsmax, they build themselves as farther right-leaning than Fox News. So if Fox News isn't enough, you can keep going with Newsmax. But they had a strong start in digital, so they have a really big digital following, and their advertising revenue since 2020 is up 400%. So it's a lot of My Pillow ads, but it's an interesting one to watch. I think it's a tough time to be in the media business. I think we saw, I don't know if this is related or not, but I think if we went on what's trending on Stocktwits, DJT's down a little bit. I think those kind of play together to some degree, but also you have different outlets speaking to similar preferences, and it is a battle for attention. So that will be an interesting one to watch, although I'm not sure, the IPO market is fully back. We are seeing some of these companies go out. StubHub, did you know that one, Rob?
No, I did not.
Does that interest you at all as an investor, StubHub?
Nah, I mean, I'm never interested in any products that rely on squeezing as much money as possible out of a consumer without updating the product, and that's StubHub.
Wow, that seems like a good business model, though. Cost down.
Absolutely. If no morality and no integrity equal that, so you got to really make a decision, and then when you go public, very much like Newsmax, I think the exit liquidity becomes, your cult or the people that don't care. That's just not a world where I feel like I would love to make tons of money doing something good. If you have to resort to that, you're in a bad place, I think.
Right. I don't know. Big ESG guy. Just kidding. But let's talk about so Rob and I kind of came up in Fintech in the similar time.
In the classical sense, yes. No, because you don't even hear the word Fintech anymore. It's very antiquated. I feel like we've aged.
So I was working at a Robinhood competitor. He's at Rally. And I'm curious what you think of like all these moves Robinhood's making. So the event last week, they announced banking products. They announced wealth management. They announced cash delivery, which I'm curious if you're the user of that potentially, or like who does that. But what do you think of Robinhood where they've evolved to as a platform and where they're going.
Yeah, I mean, I'm going to tread lightly because I feel like you have this real affinity toward Vlad now. I don't want to insult you or insult any future opportunities for you. So I'm going to tread very lightly. But the way I think about it is that I thought they were going to be doing this stuff 10 years ago, to be honest. Like, I really thought that their whole thing was always going to be step on the gas, pump out features, and kind of create the community for that 19 to 35-year-old investor that they wanted, which was more and more and more and more and more at the time. It went into this little wave when things got bad and Vlad was on the apology tour a little bit, where they stopped creating new features. And I thought they were just kind of like looking to get bought. I thought it was going to be one of the situations where it was taken back private or something. I didn't realize it was going to be what this is now. And now it's back to what I always thought it was going to be. And like they got the collective sort of attention back from that investor who was probably going elsewhere. And it was at one point it was NFTs that went away. It went to meme coins and back to crypto. That's kind of waned a little bit. They have this perfect little sweet spot right now to pump out these new features that kind of allow for that younger investor to, I would say, mature a little bit, where it's not just more Robinhood Gold features, more options, more derivatives contracts. It's the ability to sort of actually create a portfolio where this is also a Howard Linsden thing. As that generation of investor gets older, they stay with Robinhood instead of leaving to go to a private wealth manager. I think that's a whole space of finance and fintech that everyone's tried here and there, and bigger companies have tried, but it hasn't been done effectively. And now I realize my video is frozen and I look insane right now. Hold on.
Just leave it.
It's not coming back. All right, I'll leave it for now. All right, I'm going to leave this for now and then we'll figure it out. Hopefully it comes back in a minute.
What should we do? I think we should leave it. I think
it's thumbs
great.
upping too.
Let's make you smaller just so no one needs to see that.
Thank you, God.
There's a chart in the deck that is global asset under management from the WF report. And this is, I think, speaking to what you're getting to, a huge leap in assets under management for individual investors. So in 2014, it was only 45% of the total global assets under management. By 2030, it's going to be 61%. So managing this amount of money is going to be big, big business. So Robinhood obviously is getting in there. That's okay. This is live TV, folks.
No, I'm doing it right now. All right, I'm gonna figure this out. I'm refreshing right now.
Should he leave and come back? Yeah, Rob, leave and come back, or not come back, whatever. But yeah, so this chart I think is telling. I think when Robinhood was first coming up, everyone's like, oh, just a bunch of kids trading, dollar shares. Oh, there he is. But now look at this. This is like a lot of money being shifted from institutions to individuals. Robinhood obviously wants a cut of that. But what's interesting to me is when they announced the prediction betting stuff, we're like, oh, they're going full Degen. It's like these are serious financial products. So they kind of want a piece of everything, and I think they see it all as one universe. Is that how you like? Would you use prediction betting with Robinhood?
You know what? I never thought I would use crypto at Robinhood, and I did once that became available. I think it becomes one of those things where it's like leave it there to let the community explore it a little bit, and then eventually you get caught doing it. What happens is that around the election cycle, we saw it with Kalshi and Polymarket and all the prediction markets and the events contracts. If it's there and everybody's talking about it in your group chat, you don't want to be the last one holding the bag that didn't do it. So I think what they get on Robinhood, and when you get it with a lot of these with brokerage apps that kind of go outside their lane a little bit, is that you give them the option to be a degenerate, and then when you realize that rug pull happens, to go back into one of these other sort of more mature products and be an adult. And when you do that all in the same space, inevitably you get that cross-pollination by accident, which I think they're going to be really effective doing it, because that investor who came in and was off Wall Street bets in 2018 is a little bit older now, and they're in a position where they need to do some more critical thinking about their future, and they'll scoop all that up at Robinhood for sure.
Yeah. I mean, you do your IRA in there. Public has buy T-bills. It's all like one big pot of stuff that you can potentially buy with your money, and it's very interesting.
Or on leverage, or not your money, even better.
Yeah, hopefully not. But let us know in the chat if that's you. And I wish you good luck this week.
I wish you good tidings this week. Yes.
I wish you good tidings. Also, let us know if there's anything you guys want us to talk about ticker wise. Of course, Shai's amazing. We miss him. He'll be back on Wednesday. But he has like this.
Am I not as smart as Shai? That's messed up. Should I bring up some technicals?
It's like a little different, You're bringing the cultural design artsy. Shai's someone will throw a random ticker and Shy's just like, he's like, yeah, I know the 200-day moving average. Like
Oh, man.
But he's at the
I
rocket
don't
launch,
got my Bollinger Bands up right now. I apologize, Shay.
So as we near toward opening bell, let's talk about this OpenAI visual generation tool. You're a designer by trade. Shy and I talk a lot about like AI, job replacement, which industries are impacted. I saw this and I was like, oh, Canva is screwed, because I'm a Canva user because I'm not a designer. You're a designer. What do you make of all of this? Are you a purist and thinking it's garbage? Will you use it in your workflows?
I mean, it's that thing that everyone's been talking about for the last 2 weeks, that the cost of creation is going to zero. So it's that the race to the bottom is the cost to create something from scratch, I think, right now.
Yeah.
But the ability to communicate with design, and we talked about this before jumping on, about the way you prompt and the way you talk to people, the way you talk to AI, the way AI talks back to you, the way you distribute it, all of that's going to be more valuable than ever. And that goes back to the old man yelling, "Get off my lawn," where I think when a new generation realizes how quick it is to create something, inevitably you create objectively bad art. And I think that what we're getting right now is just momentum. This is a momentum trade like anything else. You're getting some bad, weird amalgamations of what Studio Ghibli was. And, you know, those are, just for anyone who doesn't know, the way that you see this picture of Jordan and Scottie Pippen in this style of Studio Ghibli, there are worlds where that actual studio that creates what this came from, with the template for this, which was not obviously a part of OpenAI's move toward the generative art that looks like it. They would spend a year on a series of frames that was like a 2-second clip in a show or in a movie or in a vignette. And so as a designer, if I was them right now, I'd be jumping out the window. I'd be completely going crazy, and you can't do anything about it. It's also, copyrights aside, it's too late because it's out of the bag now at this point. Yeah. It's going to keep going like this, and no one's going to stop. So I think that as that cost of creation goes down, we're already seeing that move away from like the broad stroke, just put stuff out, super flat design, super minimal, sans serif fonts, everything looking and feeling like sweet greens. Like, we're moving away from that anyway. And the designers who did that stuff, I'm friendly with that whole community. They're moving away from it too and going towards something more ornate and makes you feel something a little bit differently. There'll be a premium on that stuff, and all the other stuff where you look around New York now and it's just like the soulless glass, buildings. I'm in one right now that don't make you feel anything. Like, those will become their own world, and there'll be way more of those. They'll get way cheaper. And then the version of like really, really pretty, thoughtful design that makes you feel something, I think the cost of that will go up, and the ability to do it will get harder and harder.
So what kind of message do you think Scottie Pippen was trying to send with that image?
I don't think Scotty's real anymore. Scotty's Twitter, Instagram, Scotty's social persona has been completely hijacked by somebody who's playing some weird long game to take all of his money. Yeah. Or he had like a gambling debt or something like that that's requiring him to be a puppet for somebody else. It makes absolutely no sense.
Well, we made a photo of you using the tools.
Jesus Christ.
Here you are. So on Rally.
Why is it so accurate, Katie?
It's really good. That's why I said, I was like, it's amazing. Like, so this is, we'll get into it later in the show, but you can buy part of a Stegosaurus on Rally. And Jesus I gave Christ. You 2 watches. On purpose. So yeah, this is, and then I did one for myself, which we can show, which is also very accurate.
Yeah, but you did it for yourself. It's not gonna be the same.
How good is that?
You think this is you? You think that's you?
I'm wearing a Bills hat.
It's got all. Yeah, it's got all.
The Wall Street Journal is falling to the ground, and I'm running through Central Park.
Listen, no one should, this should be a rule for AI going forward. If you're going to make images of yourself in any style, you should not be allowed to be the one who creates the prompt. It's got to be done by somebody else.
You also just said, though, that yours was ridiculously accurate.
It was yeah, I mean, you know me pretty well. Like, it's pretty accurate, but that said, sometimes you look in the mirror and really understand who you are. I'm trying to get closer to that now so I can appreciate it,
All right, well, I think it's amazing. This is like amazingly fun, but I agree. I think we can go back really quickly before the opening bell. There was this tweet talking about what you were getting at, Rob. About it says, if it's not already obvious, the most valuable items in the future will be the old and the beautiful. All of text will become AI slop. All of art will become AI slop. Reaction to AI slop. The vast majority of genuine human beauty that will exist has already been created. Do you agree with that?
I don't know, man. That's that line of from the patent office and whatever that was, the late 1800s, where it's like, everything's already been made. Let's shut it down. I wouldn't go that far, but also, like Alexis Ohanian replying about collectibles, he's been on this since before it was hot and before it was a trend. Yeah. And anyone who's seen a few of these cycles knows that the old, pretty stuff will last, and it's going to keep lasting. That's always been my thought.
Do you think any brands are like, oh, Gets me every time.
Time to lose some money. Let's do it.
Yay. Speaking of design, do you think any brands, publicly traded or not, who's like crushing it design-wise that isn't this Slop mess?
Oh man, that's a
Obviously
good
not
question.
Sweet Green because you already dragged them.
Yeah, I didn't mean to do that, but that's like the Sweet Dream, Lululemon, like ultra minimalist, beige color, everything. I think that kind of had its window, had its moment. I do think like Nike is trying again. They had this little wave when you go for like giant companies that everybody invests in and that finds its way into like pension funds type of thing. Nike has been one of those brands that it's gotten beat up so badly, not just the stock, but just human people in general, and like that word culture, that horrible word that everybody uses wrong. It's gotten beat up as like not innovating, but I think they've really they brought a bunch of people back from the earliest days of creating the streetwear and like the kind of like the sportswear version of Nike, and they're focused way more on like smaller collaborations and doing things differently from a design standpoint, building those run clubs out and doing some community driven stuff. I'm interested in what comes out of Nike over the course of the next like year and a half, 2 years from a design standpoint.
Well, their new CEO he's like a lifer at the company.
Yeah.
But yeah, they had earnings a couple weeks ago. Not great, but also like it's not a great time to be selling sneakers, I guess.
It's not a great time to sell anything either. But you can sell feelings, and I think that what they're doing right now is trying to get back to that core where it was like, the film night, sell a feeling of victory and doing it where it's not just like in the moment right now, investing more into the worlds that are the counterculture that haven't just been purely basketball and Michael Jordan.
Yeah, it is weird to look at these brands. Like I was on the subway the other day, and like a group of like a group of teenagers gets on. You're like, oh god.
No, Katie, I don't know that because I like everybody. I want to be friends with everybody, so I don't know what you mean.
I thought you were gonna say it's because you don't take the subway, which.
Nice try. I take it every day, but yeah.
So I'm sitting there, like a bunch of like Midwest kids get on. They got oh, here we go. I think it was like a choir group.
Were they wearing like Nebraska sweatshirts? Well, I know they're Midwest kids.
They weren't from New York.
Okay, understood.
But they also had like one of them had like something choir. I didn't recognize the town.
Got it.
But anyway, I look around and I like go a couple stops and I notice not one of them is on their phones. Weirdest thing I've ever seen. Nobody's on their phones. And then I'm like, start like checking out. I'm like, what are they wearing? They all had Brooks shoes or Crocs on.
Yeah, Crocs is that weird one. You know what's crazy? You say that when Crocs opened this store, I think it was on like Mercer and I forget where, and like Prince or something, I forget, in Soho, and it was the huge corner store. It's not there anymore, and they did it a few years ago. It was across from Chanel. I'm like, who on earth is going into the Crocs store? I missed that entirely, and then it was like when Post Malone started doing it, and then like people were really glorifying and kind of like romanticizing like kitchen staff who always wore Crocs or wore like those versions of shoes when you're in a kitchen in a restaurant. Then it took off and went crazy, and I realized I don't get it as much as I used to anymore, and I got to pay more attention to what's going on. But they've committed so deeply for years to Crocs, that under 15 group, under 16 group. I did not see that coming, and that's also from a design standpoint. They've done a really good job of collaborations, adding little sort of clip-on pins and stuff to the individual where like you can personalize your Croc, which I think the Nikes and the Adidas and the New Balance of the world haven't done effectively yet. They've gone after like the 30 and up group. The 30 and under wants to be like completely individualized on their footwear.
Yeah, you want to put gibbets on your Nikes. Got it.
Yeah, I personally do, of course. Yeah.
Okay, guys, let's go back to the markets because it's as red as my shirt right now. The Dow is down 300 points. It's not great in there. QQQ is down significantly. The Dow Jones is down. S&P 500 down over 1% already. NASDAQ's down 2.28%. Seeing a lot of these tech stocks getting absolutely hammered once again. Let us know if there's any specific tickers you guys want us to cover here. I'm in the chat with you on Stocktwits. But I think this is going to be an interesting day. I think Shai pointed out last week that there's a lot happening this week that's going to sort of set the tone for the next quarter. Obviously, we have the Tariff Liberation Day, but we also have a ton of jobs data coming this week. So we have the ADP numbers, the job openings data, and then a big U.S. job report at the end of the week. That's going to be super interesting. There's also some more retail earnings this week. So Restoration Hardware, PVH, that's the parent company of Tommy Hilfiger. All these are sort of indicative of consumer sentiment, which we've seen continues to be a little shaky right now. One thing that's interesting on the sentiment side is this movement of people like scrambling to buy cars and other things now because they're going to be more expensive later, which I think is weird behavior. Because do you need it yet? Why would you buy it now? But they said that could be causing some inflationary pressures as well. So, Rob, do you follow the macros at all? Like, what's your investment mindset right now?
That's funny you say that, because I've been back and forth on how much emotion I should put into all this, because I'm thinking in my head like about buying an apartment right now in New York, which is absurd. Like, you can't, no one can buy an apartment in New York. Everything I want is $20 million too, and obviously I don't have $20 million. But
it seems unnecessary.
I would counter the opposite. You want a pool on your roof in New York anyway, in your townhouse. But the way I look at it is that if I want to buy an apartment right now in New York, if anyone wants to buy an apartment in New York, you're likely gonna have to come in with way more cash than you want to. You're gonna have to commit right now to 6.8, 6.9% and hope that you can refinance sometime soon. And you're going to keep this thing in your head that I have right now where, damn, why didn't I buy that thing 3 years ago, or 4 years ago, or 5 years ago? And it doesn't go away. But then you start to do the math, and there are a lot of buildings, and the one I'm in right now, I tried to buy the apartment I'm in. It's cheaper to rent the unit if you're and keep that money and keep the liquidity and keep it in a stock market or keep it in a savings account getting 4.1%. But when you see the markets the way they are right now, when I'm $2 away from break even on Nvidia when I've been up nonstop for the last year, and you start thinking in your head like, damn, is it going to be the same way it's always been, or is it going to be different this time? And I think that's the one big tick that I'm trying to get over myself, that I know a lot of friends and a lot of younger people are getting over too. Whereas if you zoom out, you're like, yeah, keep money in the stock market. I'll keep renting my apartment. I don't need to really own a ton of things. But I'll buy a couple assets so I can have them. And I'm sort of battling back and forth with that right now about what to actually do, because I've never really owned enough stuff. It's always been, I'd rather have the cash, but I'm not, if you're not going to guarantee me that I'm going to make 8% in the market this year on cash, and it's not a guarantee that I'm going to make money on an apartment or on a hard asset, I'm in this standstill of what do I do with the money type of thing. Mm-hmm. I think a lot of people are in that spot too. I think it's the Warren Buffett going mostly cash right now type of thing. It's like, he's doing it. Am I smarter than Warren Buffett? Absolutely not. I'm going to hold on to it for a minute.
It's too late once you see he's done it.
It's buy the rumor, sell the news. You're right. It's actually too late. You're absolutely right.
I think you're getting to something interesting, which I think about a lot too, which is like when you say you want to own an apartment in New York, is that coming from an investment place or a place of, I need this to make it? Because I think that's what's been like ingrained in that. Then when you back up, you're like, wait, though, like, is that even the reality anymore? And to your point, if you do the math equation, that might not be the best move for you.
Yeah, no, it's ego. It's like, I want to own things. I want to own a piece of New York. There's no American dream for me where it's get a house and a picket fence and all that type of stuff. But having like a nice apartment in New York that I own, you know what I mean? In my mind, that's like where I want it to be. Along the way, I just kept trying to like rent nicer apartments. So now I'm at a point that, 1% problems, no question. But I'm looking at what I really want. It's just it's going to be out of price range always. So I want to own the thing. I want to have the thing. But, it's more, but it's a millennial thing that's been ingrained in our head from previous generations. You have to own a thing, And I think that's part of that's 100% what it's all emotional at this point.
Yeah. I think it's an interesting trend that's going to continue. We got some shout outs for stocks people want us to talk about. Oh, wait, let's see. Yep. Okay, yeah, Goldman. Yeah, I mentioned this earlier. Goldman recession odds up to 35%. That's getting a little high. Up from 20%. Let's hope not. Again, like you have people like Tom Lee this morning saying like V-shaped recovery. Who knows? Nobody knows. No matter what happens, there will be a montage of pundits saying things full-throated. That is completely wrong. That happens every time. But yeah, today, in addition to the U.S. markets shedding value, the Japanese Nikkei is in correction territory. A lot of the markets outside of the U.S. are obviously a little bit in panic mode about Wednesday. We shall see. We shall see what happens there. Someone's asking about Tesla, so let's go over to Stocktwits and see what's going on at Tesla right now. Rob, are you a Tesla investor?
You know what I do with Tesla? I do, that's like 10% of my YOLO stuff, where if Tesla has like 5 down days or 6 down days in a row and getting killed, and especially if it's like on a Monday like today, I'll buy like weeklies to try and play a turnaround Tuesday and like get the alpha out of Tesla on the way back up. But I've never held it for more than like 3 weeks or 4 weeks.
Interesting. Okay. So yeah, that's pretty indicative of what's going on over there. Tesla's interesting. So Shai, my regular co-host, is very long Tesla, and he's long on the robotics AI vision for the company, and not and the autonomous vehicles, and not even sort of the present state of EV. Do you think that way, or for you this is like a shorter term? You're in and out of it.
Nah, I'm like in and I can't. I just don't have. I don't have the intestinal fortitude anymore to stay in something that moves 11% or 14% over the course of 2 days or 48 hours.
Yeah.
And also, when like Kathy Wood and a few other people start coming out and putting crazy price targets on things and start talking about the 2000s when it comes to Tesla, it just feels so outside the realm of possibility with everything that Elon Musk does on a day to day. His identity is too tied to that name for me to think I should put my money there long term.
Yeah. How often do you move stuff around your portfolio?
This year, not as much. I used to, when you're younger, you think you're a genius, I think. Now I know I'm not smart. So I'm trying to do things like an adult would do. I have like, I have 2 or 3 stocks that I have a bucket of my stuff in right now. I got out of, I sold close to the top of Bitcoin, knowing in my head the same thing I think you guys have spoken about a little bit too. That like the low, I knew the 80s were coming to a certain degree, but I felt like 60s were very possible for
Yeah.
Bitcoin. So I got out of that. I got out of all meme coins. Right now, I'm long like 1 or 2 big sort of tech stocks that I've had that I kept adding to my position. I got a couple defense stocks. I'm trying to be a little more of an adult, and then I've had gold for a little bit. That doesn't feel toppy, but it feels like that's just becoming a very trendy trade. But I haven't been actively trading. I'll buy calls just for the week here and there, or buy puts for the week here and there, but I'm not doing any straddles or
Yeah.
any like selling cover calls against my positions right now. I've been trying to be very mature about holding stuff and doing more of the weighted out.
Yeah. That survey reference, I think 55% of people change their portfolios once a month and 22% once a week, which seem for our audience, like you guys are probably in the chat thinking like, whoa, that's like hardly anything. But this is a representative sample of investors across all age groups and like not self-described traders. So if you're like not a trader and you're a general like long-term investor and you're moving stuff once a week, it's 1/5 of people. That's definitely a different behavior than we've seen. So yeah, it goes back to things just are more ephemeral now.
Yeah.
Tesla down 7% almost. So is Palantir. Yikes. Innovative Industrial Properties, that's a weed stock. That's down 18%. Let's see what's going on there. They must have had a bad earnings call. Elsewhere, Moderna, that's down 13% right now. Our producers were talking about this before the show. A lot of these biotech stocks getting hit. Coinbase is down 4.5%. Trying to find something that's up.
You know what's crazy though? Like it doesn't feel bad yet. I don't know how to describe it, but there was this emotion around 2008, 2009, where like everybody was having the same conversations early 2008 about recession, and you're starting to see these really volatile days of names that the baby thrown out with the bathwater situation. They're down 4 or 5% on days when like the real crazy sort of speculative stocks would be down 10 and 12%. It doesn't feel bad yet. So it's not when it starts feeling that way is when I think I get more active. I think most people become more active traders. When in reality, that's also the Warren Buffett thing. It's like if you owned a home and it was down 10% in 3 or 4 months, you're not selling the house. Like I think it's the same situation. I'm trying to at least pay attention to as an adult.
Yeah, I'm trying to find. I had bookmarked this Zeet, Zeet. It was showing though, like this is like anything historically. When you read about something in history, it feels like it just happened all at once, and it's a series of events that build on each other. And they were basically making the argument that we might not be, but we might be in that same sort of pattern. Here, I'm gonna send it in we can pull this up. We might be in this pattern of like this drumbeat of like baddish news, and then something just breaks. And I think that's what everyone's kind of on edge about, and kind of just wanting some kernel of good news, and holding on to anything we can get, because it is, when you zoom out, these things do like this. Oh, we'll pull it up. I don't know if you guys can see it on the screen. Yeah. So like this is the 2007, 2008 sequence of events. I mean, this was months and months before the fallout happened. And so I think about this a lot, just even in like historical, like political, like whatever, like what are we in the middle of? Because you're always in the middle of something and you just don't know because you don't have all the context.
It's so true. And then when it happened, you know what it is? It's crazy because now I remember this like it was yesterday, Katie. That Lehman failing, that was September 15th, 14th or 15th. I forget what it was, but it's like yesterday. But I was in a friend of mine's basement. We were watching. It was the last football game of the night. It was Steelers Browns. I remember this like it was yesterday. And then they cut in, and they were like Lehman's going under, and I don't know what that felt like. Like I remember like his dad was there with us, and it was like a very uh-oh moment. And I was like, damn, this is gonna be bad. Like that feeling hasn't even come close to happening
Yeah.
yet. Like we're not. It doesn't even feel like we're even close to that part of the curve yet. Where that true capitulation, the real rug pull happens. And when it happens, you feel it like 2, 3 weeks beforehand, and it's the too late moment. We're not even close to that yet.
Yeah. Let us know what you guys think that moment's going to be in the comments. Someone did call out that Pepsi and some other consumer staples are up slightly today. Was checking that out on Stocktwits, up almost 2%. So there's some glimmers of hope here and there. But overall, it's going to be a rocky couple days, I think, until we get some clarity on what is going on Wednesday. And I think part of it is, and Shai and I have talked about this a lot, is like the do to say ratio of the people in charge right now. There's a lot of saying, and then the reality doesn't match up. It's either more aggressive, it's less aggressive, but it's hard to take words at face value. And so even though the Wall Street Journal reporting last night, the tariffs are going to be all encompassing, include everybody, they're going to be more aggressive. Just last week, the Wall Street Journal was reporting that it was the other thing. And then you have Trump saying, yeah, it'll impact everyone, but like, then he goes, we'll see.
I
Like,
think
he just like,
yeah, it's all make believe. It's like we've gotten to a point now that, in my opinion, and this isn't a novel thought. People have been saying this for a while. Anything that our current president says is more of an attention thing. It's like you're paying attention to this, come pay attention to me. Tariffs, no tariffs. Tariffs, no tariffs. Craziness, no craziness. Come out, no one said anything. I got to say something right now. So it's hard, and the markets and the press always want to attach a reason to why the market's moving this way or the other. So they're gonna be able to latch on to that. But in reality, to me, it's based on emotion right now. We've gotten to a point that words don't even matter. It's all based on emotion. So if the emotion is positive, everything's great. You'll get a quick little reprieve. When it's back to, well, things are gonna go down. You got to deal with it. Things are gonna be more expensive for a little bit. It's back down again. I don't know. It's hard to take anything anybody says for any value at all at this point.
Totally. So this morning there was data showing the actual flight traffic spend, US, Canada, has not really been affected by the beef we currently have with Canada, which if you look at the surveys of Canadians are like, I'm not going to the US, but they're going. So there's also this, a lot of the data now, there's actual real data that comes out, but then there's things like the sentiment surveys, and it's like, I don't know, people are saying things like they're just talking out of their ass kind of. And you have to match it up a little bit, but you're right, it's everything's reactive and the market's moving on every last word, even though it's changing.
It happens so quick. We're gonna forget. We already forgot about Saratoga water memes are gone. Those are done. We're gonna forget about Studio Ghibli and turning people into Muppets with AI next week. That'll be gone too. Right now, what's bubbling is everybody saying the make believe thing. When I'm in the back of a Tesla Uber, I get nauseous. That's a thing now. That'll be gone.
What is that?
Yeah. Oh, you're not on that yet. That you'll be tweeting about that in 4 days. It's the new thing where everybody pretends like it's an Instagram story or a tweet oh, I can't be in the back seat of Tesla Ubers anymore. I always get nauseous. That's make believe. No, you don't. I don't know. People make it because one person with influence said it, and everyone has to say it.
Oh, they're creating FUD around Tesla.
Yeah.
It's all the things to create FUD about, that's the thing.
And it's everybody just needs to follow this stupid thing for a week, and then it goes away and something new happens. It just happens so much quicker now. So if you want to be an active trader right now, man, you got to just be awake 24 hours a day and have no family, no friends, no emotion, and just be thinking go, 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 go. I don't know how anyone does it. It's exhausting.
We're all family here at Stocktwits, and we rely on the community to get us through. And also the what is trending feature, which will tell you in real time why something's moving. But yeah, I think you're right. It's a lifestyle.
It's a lifestyle choice.
I do think I never saw Game of Thrones, but there's a quote, chaos is a ladder. I think Shai and I talk about this a lot too. When things are really messed up, sometimes there's an opportunity. And so I think a lot of the people here are like, yes, it's bad, but also contingency planning, getting creative. And so continue sharing all of your creative ideas in Stocktwits with us all the time.
Absolutely.
Rob, you've been a great guest. I want to quickly touch on sports because I feel like I have a bro on the show. And
Oh my God.
So let's Final Four. Who on the men's side? We'll specify that one for now. Who do you got? Who do you like?
I don't know. After watching Duke this weekend, it's hard to think that anybody beats Duke. Like they're just super well rounded. They hit their threes. Like they're super big down low, and like if Cooper Flagg's not doing it, it feels like Knipple will do it. So it's hard to bet against them after watching them. I thought Auburn was a team to beat, but it seems like Duke is a team to beat. Yeah. But what I only know, I'm talking about this from a gambling perspective too. So it's not because I lost a ton of money on the Duke game. So part of it is like I should have realized. Yeah, and thank you. I should have realized beforehand what they were about. I made a mistake on that one.
Yeah. I believe also, this is Jeff Mackey. He's a good follow on X. Last time it was 4 number 1 seeds in, the market went down 40%. So it's usually...
it doesn't count though. That's pre-NIL. Like NIL is different. These number 1 seeds were built. They weren't. They were bought, not built. So it's a little bit different now. I think. I would say that this is different. Do you have any hot
takes on the NIL?
Nah, I mean, I think at some point it just has to stop. You got to cap this. You can't be in a situation where the money has no top and you can keep going and going and going. Because there were crazy successful, super rich alumni at every one of these big schools. It's going to be really hard for mid-majors to ever compete again unless they have some outlier alumni who wants to put a ton of money in the pool and buy up the talent. But then you also need a great coach so someone goes there and knows they need attention. You got to get a team that's going to be on TV, a team that's definitely going to make the tournament because everybody's thinking about the next step and the next level or how they can get the most money. So it's going to be extremely hard for it to not be 1s and 2 seeds.
Yeah. I was thinking too, like usually wealthy donors, they want a building, they want a wing. Now is all their money just going to go to the athletic department?
Easily. You see it now. Like you see, like St. John's is the perfect example. And this is being friendly with the staff and the team at St. John's a little bit and having gone to a bunch of games this season. Mike Rapoli from Body Armor, who, is a billionaire, has basically said, like, my checkbook is open for whatever you guys need to build this team. And now it's like you have this legendary coach in Rick Pitino. You have a team that got put together that's got enough talent on it to make NBA rosters. And you have a city and a place like Madison Square Garden where the expectation is going to be put out great product. And you have somebody who's willing to bankroll it. So when you get like that, a team that came from relative obscurity on the national scale in 2 years becomes powerhouse team potentially. That would have never, ever happened without those super wealthy alumni and without like one really great coach who can bring those two pieces together. You're not going to get that at like, Middle Tennessee. You're not going to get that at those type of schools.
You know where you are going to get it?
Notre Dame?
No, Syracuse.
Cuse. I didn't even think about that.
Because Carmelo Anthony is about to bankroll his own son.
I don't know. The glory days behind us, man. I don't know.
Oh, well, that's what you think.
I don't have ties to the area.
Boeheim's got to come out of retirement. It's going to be great.
Jim Boeheim, you think, is going to come out of retirement? Yeah. Those guys got run out of the sport because of NIL. The only ones that are left are ones that know how to deal with it.
Yeah, Boeheim was doing, I don't want to spread gossip, but Boeheim was doing NIL before that was a thing.
You think everybody wasn't doing NIL before that was a thing?
Come
on.
He had deals cut with like the local like car dealers.
You think Melo didn't get the duffel bag full of money like the movie Blue Chips? You crazy?
We're just speculating. There's no evidence.
There is no speculation about that. That is 100% true. Yes.
Yeah. Well, let's go back to the markets briefly before we have to step back. The S&P is now at the lowest level since September. I love these headlines because that sounds so bad when you read it, but then it's like it's September.
I thought September was like a week ago. That sounds so dumb.
That's what I mean. Like you zoom out and it's like, all right. Like I get it though. If you're in the short term and the day to day, tomorrow we have another guest co-host and he was talking on his show Friday about how he lost a ton of money at the end of last week and was like pissed about it. So like, yeah, if you're in the day to day, like it's rough going. But if you're more long term, September's not that long ago. So look on the bright side.
That's the degenerate gambling thing too. Like you're only as good as your next win. So all of a sudden, like all it takes is one day to make 2%. Even if you lost 7% the day before and you feel like you're on top of the world, it happens so quick.
All right, Rob, thank you so much for joining us. Where can people learn about Rally and you and follow the things?
Sure. Follow the things at Rally Road, rallyrd.com. That has a bunch of the links on Rally Road on Twitter. And I'm Rob Petrozzo across every platform. If you want to hear angry old man takes, by all means, feel free to follow me.
All right, and we'll see you back here tomorrow. Special guest host Ben from the Ben and Emil Show is joining me, so that's going to be hilarious. And we'll be here all week covering everything that's going on. Thanks, everyone.